much for the interest in Ashok Leyland. I'll just announce the results very briefly. I'm sure all of you must have seen it on the web. The total industry volume, and I'm here giving SIAM numbers, the total industry volume was, for the quarter, was 1,168, that is trucks and buses put together. And this was a growth of 26% over the same quarter last year. So the industry continued to grow over the same period last year. Ashok Leyland actually grew faster than the industry. Our volumes were 35,628 MHCV, which was a 32% growth over last year. I also wanted to share with you that this quarter again, it is record Q2 volumes, record Q2 revenues, and record Q2 EBITDAs and PAT. The same trend has continued with H2 as well. Our market share in the truck business was 34.3%, our bus was 42%, and overall our market share on SIAM basis was 35%, as opposed to 33.5% in Q2 of last year, which was an increase of 1.5%. Overall revenues was 7,608 crores, which was 25% higher than Q2 last year. Our EBITDA was 806 at 10.6%, and that grew at 32% as against the 25% growth in revenues. Our PAT was 460 crores, which again grew at 38%. Our overall debt at the moment, we are cash positive of 700 crores. I think with that brief introduction, I would now hand it over to our chairman, Mr. Dheeraj.
Good evening. Gopal has already announced the results, and I must say that given the challenges of the heavy discounting and increasing raw material prices, the continued double-digit EBITDA in 14 of the 15 sequential quarters exemplifies the operational efficiency drive of the company. The growth in market share in Q2 also endorses the reach of our ever-growing network. I must compliment the team for its continued pursuit of disruptive innovation. The InnoLine BS4 engine holds tremendous potential as it reduces operational costs significantly. It is the only BS4 engine with a manual pump. The team is continually looking at driving operating leverage despite the challenging times, and our plans and tasks are clearly cut for the way forward. The current times are no doubt challenging. High oil prices, depreciating rupees, the tightening of the NBFC sector, which is critical to our industry. The uncertainty in economic and political environment as well. But these are transient challenges, and we should not take our eyes off our larger purpose. My direction to the team has been that while we will need to counter the short-term challenges, we need to pursue our larger journey of devolatilizing Ashok Leyland, drive international revenues, increase new generation business, and work on people, processes, and operational efficiency. We will continue to invest in innovation and technology as that is the grain of Ashok Leyland. As you must all be aware by now, Mr. Vinod Dastri, our Managing Director and CEO, after a stint of 14 years at Ashok Leyland and 7 years as the Managing Director, has decided to move on and pursue other interests. Together with Vinod and the leadership team, we have transformed Ashok Leyland into a forceful commercial vehicle company today. The strong leadership team today drives the innovation, strategies, and operations of the company. I must acknowledge Vinod's contribution in this transformation and the cultural change that he has enforced into the company. I would like to wish him the very best. Vinod is here till March 2019, 31st March 2019, and I will also, on the request of the board, be playing a more active role as an executive chairman, and on key issues along with Vinod, provide the necessary support during this transition. All organizations go through this transition, and Ashok Leyland is no exception. I believe, one of the questions you would all be having, but the Nomination and Remuneration Committee of the board will meet shortly to decide the future course of action in identifying the next MD and CEO. I would like to now hand over to Mr. Vinod Dastri.
Good afternoon, everybody. As Chairman has already pointed out, this was an important announcement that was made at Ashok Leyland today. I wanted you to hear it from me directly that this was not a flippant decision that was made as a knee-jerk reaction to some issue. There is absolutely no issue. In fact, people often try to find times in their career when they are looking to pursue newer interests and newer learnings. But there is never a good time. I had considered this about 6 or 7 years ago, but the company was not doing well. And at that point, I didn't want to leave. I wanted to make sure the company was transformed well. And we took a company that was not doing so well, and we made it into one of the best performing automobile companies in the world. I had a solid team doing that with me. And when our team got together, we decided that, look, we have made it into a good company, and if we don't continue the path at which we have created, we will again decline. So we should lay down a platform to make it into a great company. And for that, the team worked very hard to put in a solid platform. We have 3 sets of businesses. One is the core business, in which we have got a world-class Euro 6 modular vehicles as well as electric vehicles coming. The adjacent businesses, LCV is doing extremely well, the defense is doing extremely well, and the power solutions is doing well. We have launched several frontier businesses, the electric vehicle business, the customer solutions business, the digital solutions that we are doing exceptionally well on. And I have a solid team backing this, and an exceptional board and the family support. So I felt that this was the right time to do it. Like I said, there's never a right time, but to do it when the company is in a very strong position and leaving it with a team which is very, very capable, that is what may help me make this decision at this point. That's all I think from our side. We'll take questions now.
I think so, yes.
Sure. Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. Best wishes to Mr. Ashari. The company has done quite well under your leadership across parameters. Good luck for the future. On to the business, the first question I would ask is, something on the demand side. In the opening comments you talked about NBFC, about sort of macro uncertainty. Could you talk a little bit about how the ground level demand environment is, how October has been, what sort of inventory levels do you have currently? That's my first question. Thanks.
Thank you very much for your compliment. First of all, I appreciate that. As far as the demand is concerned, look, in the last few weeks, there has been a little bit of a slowdown, basically due to the credit crunch and all that, but this is temporary. 40 to 45% of our volume that we are getting in the industry today is driven by construction segment. It's not driven by automotive segment, market load segment. So as a result, there is a delay, but it will catch up because infrastructure projects are going on, and even if the market is flat for the rest of the year, the overall growth for the year will be somewhere in the neighborhood of 15 to 20%. So I am quite bullish, and the next year you will have a Euro 6 pre-buy. So that is going to be extremely good. The year after is when the government is announcing the scrappage policy. Usually the market falls after that, but there is a scrappage policy that is coming up which will help boost the demand. And equally, as I was mentioning in my earlier comments, that our core business, produce vehicles, coming itself to produce vehicles from 2 tons all the way up to 55 tons, which will be Euro 6 compliant, it will be electric compliant, it will be modular in left-hand drive, right-hand drive. So as a result, it will be a much bigger market that we can address, not just in India. So in that sense, we are fairly bullish about it.
Right. That's helpful. Could you talk a little bit more about the NBFC financing? Like what percentage of your financing will be NBFCs? What percentage is coming from the in-house subsidiary?
I think our internal subsidiary is less than 15%, maybe somewhere around 10%, HLFL.
Yeah.
We don't like any NBFC or any bank to have more than 15% so that we spread the thing. I also remember you asked a question about inventory. I think it's about 7,700 vehicles.
Very well.
It's quite balanced. Even with our dealers, we normally ask them to keep about 2 weeks of inventory and not more. And I think they are somewhere in the 16 to 18, that's all. It's not, if the dealer has inventory, we won't push inventory into it.
So even the dealer inventory is 16 to 18 days? Is that...
Correct. We normally keep 2 weeks because that's the transit time. But maybe because of Diwali and lack of drivers and all, it might have gone up by a couple of days. But we watch it very carefully and we ensure that the dealer inventory doesn't spike.
And just related to this question, with slight slowdown that you've seen, have you seen discounting rise in this environment?
Discounting has been rampant, and there are some competitors who are purely going after market share. We are not going to chase market share like that. We focus on the value that our vehicles provide, and we have increased prices in September. We had increased prices in October. We also announced increased prices in November. Some are not following, and the discounting level of the operating price still continues to be low. But regardless, we have focused on the right segments and the right models, and that's why you see that our EBITDA margin has actually gone up. And plus, please keep in mind, 3 years ago, our truck sales used to be 80-85% of our total sales revenues. Now it is less than 60%.
Great. Thanks a lot. I'll come back in the queue.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir, and congrats to Mr. Dasari for...
Excuse me, this is the operator. Mr. Gandhi, your voice is not clear. May we request you to use the handset?
Yeah, is it better now?
Yes, thank you.
Yeah, congrats to Mr. Dasari for a very strong career. My first question pertains to Mr. Hinduja. You indicated that you'll be playing an active role. So is this executive role only during the transitory phase, or this now you'd be more active even when new CEO steps in?
No, I think just to clarify, you might have noticed across our group companies as a family policy, the family does not take active day-to-day involvement or executive roles in the company. In this instance, the board requested that to ensure continuity during this transitionary phase for me to take on this role. So this would be for that limited period till the new person is appointed. And I will be working with Vinod on the longer-term actions of the company.
Okay.
I think our main task is to ensure the continuity of the vision that we have, the targets that we've set, and the growth that we've seen over the last few years. We wish to ensure that that does not get dampened in any manner. We have a very strong team, and along with this, we also have a very strong board. I think the combination of this will ensure that what Vinod has put in place will continue.
Understood. And second question pertains to, on the financial side, to Mr. Gopal. We have seen significant increase in RM cost, and on the other side, there has been a substantial decline in other expenses as a percentage of sales. So is there any accounting change, or how do you explain that?
No, the RM cost going up is a confluence of 2-3 factors. One is, Jinesh, as you mentioned, the industry has this challenge of increasing steel prices that all of you know of. And we possibly were the only players who actually have raised prices even consistently over Q1 and Q2, and we've done that in Q3 also. But the fact is that, these prices, while they kind of reduce the impact of the increased raw material prices, they still, reflect as a ratio. The raw material prices as percentage of sales is higher. The second most important thing is, this quarter did not have any VFJ numbers. So VFJ is a very high profit, high margin. The VFJ can impact the overall profitability or the gross margin. So that is another reason why we have seen the numbers slightly higher.
Okay, and other expenses?
Nothing significant that I have to export. Except that, we have seen that there is a reduced charge in warranty that was taken, because you see our entire BS3 to BS4 transition that happened. Now you're seeing that things are stabilizing. The EGR engines are working wonderfully well. So, we follow a warranty system accounting where we found that, the numbers are really dampening. Then we are also keeping a tight, stringent control on overall expenditure also. So those are the reasons for it. And some of them, to be honest, I don't want to gloat over it too much. There could be timing, but larger directional issues on the other expenses are, one, warranty. The second one is tighter control on expenditure.
Okay. And what kind of price increases have we taken?
Well, in November, I think we have again announced a 2% price increase, in the truck business. We'll have to see how much of it is inelastic and go straight to the bottom line. The team is working on this because the discounting is pretty rife in the industry, you know it. And we have to keep pace. We have to have a very, very fine balance between our, market share and profitability. So that's what our team is working on.
Okay, and in September and
excuse me, this is the operator. Mr. Gandhi, may we request you to come back in the queue for a follow-up, please?
Okay, thanks.
Thank you. The next question is from the line of Jamshed Dadaboy from Citigroup. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Just a couple of questions. First is on this, you alluded that construction is 40-45% of demand. So could you give us a sense of what tipper sales were for last year, for the full fiscal and first half this year, and how the growth has been in that segment?
See, Jamshed, we don't actually give the breakup of, the sub-segments, as you're aware. So we broadly give breakups on, the truck and bus business. So it's, the tipper sales have grown. That much I can tell you.
Okay, fair enough. And second question on this Euro 6 pre-buy, BS6 pre-buy that we are expecting. What is the level of conviction that we have? Because even when we had the transition to BS4, there was not much of a pre-buy. Obviously, it coincided that time with demonetization. But where I'm coming from is, suppose a trucker were to buy next year, and by FY21, when you move to Euro 6 or BS6, your residual value would start to fall quite sharply, because you're not moving one emission standard, you're moving two emission standards. So that's where I was coming from, that, what's the sense that we really have in terms of, and how much discounting would we have to give to convince someone to move, to buy a vehicle next year?
Well, you want to answer this?
Next year the demand will be so good, I don't think there will be that much discounting. Because, typically in the world, whenever BS6 has come, or Euro 6 has come, the pre-buy has been roughly 30 to 40% increase in TIV. So I expect that to happen. So let's see what it does. And everybody is at capacity, so I don't think people will just give discounts like that.
And the vehicles will become more expensive as well. Yeah, when you're going from BS4 to BS6, one of the reasons why a pre-buy happens is because the vehicles will become more expensive to purchase. And in terms of, correct me if I'm wrong, Vinod, but the fuel economy also, as you get into higher grades of fuel, standards, the fuel economy of the vehicle in relation to the previous generation would be a little lower. So there is no reason why the pre-buy would not happen, unless, of course, there is an exceptional event.
Okay. All right. Thank you. All the best for the future. I'll come back for more questions.
Thank you. The next question is from the line of Amin Pirani from Deutsche Bank. Please go ahead.
Yes, hi. Thanks for the opportunity. I just wanted to, go back to the issue on the credit availability. Are you already seeing, that demand is getting impacted because of credit availability, and is there a solution in the near term, or is it just something that you're concerned about?
Well, we'll have to wait and watch. You see, it's a very short, it's been about a month and a half since it has happened. Obviously, there has been a lot of news on, credit squeeze on NBFCs, and NBFCs are a very important lifeline for this industry in terms of the funding that happens. Because the entire industry almost is funded.
Yeah.
As far as HLFL goes, our own subsidiary, all I can tell you that from our own house experience, I think there has been no impact at all. The funding lines are very much in place, and we haven't seen anything which is at the moment, negative impacting. I'm sure the larger NBFCs will not be having the issue. The smaller ones could be. they could be facing a crunch. But I think the government is also looking at ensuring that this does not snowball into something which becomes very negative. But short term, yes, there is a little bit of credit squeeze that you can see. We'll wait and watch how November and December pans out. But I don't think this is going to be, more than a month or two or five.
Okay. I'll come back in the queue for more questions. Thank you.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Hello. Hi, sir. Can you, sir, update on discounts, how they have moved between Q1 and Q2, and also some color on exports? We've not seen the kind of traction we were hoping for.
Well, discounts, have been going pretty, the discounting, I would say, in the market has been pretty right. We have seen that happening because everybody is chasing the same customer, and we sometimes have to reluctantly follow in this. But otherwise, discounting has continued to be high. It depends on the type of vehicle, but it can go from anywhere between 2 to 3 lakhs to about 4.5 lakhs also in certain deals. So this is the answer to your first question. What was your second one?
Sir, so on discounts, can you share what is the average in Q1 and Q2? How it has moved?
Well, I would say that the average discounting in terms of Q1 and Q2, the numbers have been, I would say that Q1 would have been something like about 3.75 or so on a truck, and about 4 to Q2 could be something like about 4 to 4.1. So you have seen that happening. Now, this is a head in the boiler, feet in the freezer average. You see, it doesn't kind of give an accuracy to the number, but gives a direction to the number. As far as exports are concerned, the overall volumes for the quarter was a tad low. We had numbers of 2,759 for the quarter as opposed to 4,437 in the same quarter last year. So we were down by about 38%. Some of the exports that we had planned for, especially in Africa, did not really happen. We'll have to wait for the customer to indicate the invoicing for us. But all said and done, there's also another challenge that we see in the short term. In the short term, we're seeing that Sri Lanka is a very important market for us. There's a little bit of uncertainty that is developing in that market. We'll have to wait and watch. We hope that will coast out soon. The second one is in Middle East. The entire Middle East market has been affected by a confluence of factors. So we have seen a depletion in the Middle Eastern volumes, which again, hopefully in the fourth quarter, we hopefully will see a catch-up.
Okay. And could you also update on the LCV subsidiary merger and any indicative, what is the 1H profitability of that subsidiary?
Well, I think LCV is doing very well. We have seen the overall numbers grow by 42%. The LCV volumes for the quarter were 13,572 as opposed to 9,588. It has been very profitable. You would have seen the last full year numbers. At the moment, I can't give you the subsidiary numbers. All you can all be rest assured that combined Ashok Leyland LCV business as well as the LCV subsidiaries are positive, and they are accretive to Ashok Leyland EBITDA margins.
Okay, so after the merger, we should see...
Mr. Singh, may we request you to come back in the queue for a follow-up, please?
Sure, I'll come back in the queue. Thanks.
Thank you. The next question is from the line of Shyam Sundar Srinam from Sundaram Mutual Fund. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So we had introduced this InnoLine engines using inline pumps. Which tonnage segments are we targeting with this engine? I understand while the maintenance costs over the lifetime may be lower for the end customers, does it also lead to a lower upfront cost?
It is a lower upfront cost.
It is a lower upfront cost. It may or may not mean a lower upfront price.
Okay. Which tonnage segments are we targeting with this engine?
Launch with 6x2 and 8x2 vehicles.
Okay. And just one housekeeping question. If you can please share the domestic truck and bus exports, the revenue mix, please.
You want the volumes?
No, sir. The revenue mix that you usually provide between the domestic trucks, buses, exports, and defense.
We normally provide the domestic truck and bus. I'll give you the numbers. The total revenues for trucks for Q2 was 5,383 crores. The bus revenues were 565 crores. Exports accounted for about 454 crores. The overall revenues were 7,608 crores.
Okay, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Pramod Amte from CGS-CIMB. Please go ahead.
Yeah, hi. The first question is, considering the humongous amount of challenges the industry faces to move towards BS6 and other safety norms, and also the company is also going to substantially gear up for the same, how well you feel you are staffed in different divisions to take care of this challenge? And second, looking at your own internal leadership programs, what is the probability that you will upgrade somebody internally into the CEO post so that the investors can get more comfort in terms of this transition period?
The first question, just to clarify, the first question was on the Euro 6 readiness, right? I mean the BS6
no,
readiness.
Across the challenges considering, how good you are staffed in different divisions, considering that there's a CEO change expected over the next 6 months?
Well, I think as far as BS6 is concerned, Vinod, you can add here, I think the company...
I understand the question. What does BS6 got to do with CEO change?
Yeah, exactly. I mean, so...
BS6
no, I think
we are ready across all our regions. We are ready with BS6, if that's your question. As far as the leadership change is concerned, as Chairman said, it will be decided by the board and the remuneration committee.
Okay, sure. Thanks and all the best.
Thank you. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity and congratulations to the team led by Vinod. My question is for Dheeraj. Dheeraj, now that we have you on the call, I want to understand how do you think about Leyland from a 5-year perspective? Because if you look at the last 5 years, you transformed literally in terms of both market share, your balance sheet, your product capability, the number of JD Power awards under the belt now. So, but how do you see the company transforming in the next 5 years? And I also want to kind of link it to your opening comment where you talked about the international business as well. So if you can just share your view for the company from a 5-year perspective, that will be really helpful.
Sure. I think I'm extremely confident because today the foundation is very strong, and specifically first dealing with the international side that you mentioned. You see, for many years, Ashok Leyland was primarily exporting buses. Now, for the first time, going forward, we have a whole range of vehicles that have been ready for left-hand drive countries as well, and especially the LCV range and the new products that we're introducing over there. So I firmly believe that the international market and growth will be quite substantial going forward in that area. On the domestic market itself, of course, it's been a good ride the last 5 years. It's been challenging, and looking at the current market environment, competition is intense in terms of discounting. But according to me, we are in a position to continue this growth. Our network has expanded quite substantially throughout the country. Our market share in the north and east, which were our traditional weaker markets, has grown very well. So I don't see any reason why we should not be in a position to continue this market share growth as well. Along with the new product range that we'll introduce, we have a number of digital initiatives that have been launched over the last 12 months, 18 months. They are also beginning to contribute meaningfully to the company. So looking ahead across the board the next 5 years, there are, I would say, the next 6 months with the elections coming up in India as well, there could be some challenges. But beyond that, I believe we are well positioned to address the international market, our defense, spare parts, and especially the LCV range that comes in. As you might be fully aware, we started a vision, this was 6-7 years ago, that we have to be in the top 10 globally in our trucks and top 5 in buses. There was a reason for putting that vision into place, which is to ensure that unless we had volume, it will be very difficult to compete in the industry. So today when we started, we were at number 19 globally. Today we're at number 12, 13. And I'm very confident that we should be able to hit our vision of being in the top 10 very soon as well.
Sounds great. And my second question is to Vinod. Vinod, you pointed out that normally across the world when Euro 6 transition happens, the pre-buy is around 30% or so. If you can help us understand what is the after effect of the pre-buy when the regulation actually kicks in year one, how does the industry normally fare? Because that is one question which you kind of grapple with as to we understand there's going to be a solid pre-buy, but what happens thereafter? And that's probably part of the reason why the CV names are not getting rewarded for the robust demand, what they've seen in the last 7-8 months where there have been massive upgrades across the street, and knowing that there's a pre-buy of 30% which is going to bump up next year, but everyone's worried about what happens after that. So if you can help us understand what's the general global read across is.
Well, the fact that it's called pre-buy means that somebody has borrowed next year's demand this year. So that is obvious. If 30% demand is bought forward, then that much would be the demand would be lower in the year after. But there are 3 things countering it.
Yep.
The demand, like I said, is 45 to 50% coming from construction. And these construction projects are something that are not one-off. They will continue to be there, and hence the demand will still continue to come back. Even if there is Euro 6, if somebody needs a tipper, he will need a tipper. He doesn't care if it's Euro 6 or Euro 4. The acquisition cost goes up a little bit, but he'll still need to complete his project for which he just won the tender. The second thing that will happen is that there is a scrappage policy that the government has announced that will be implemented from April 2020, where all 20-year-old vehicles will go out of stock or will have to be scrapped. That alone is about 200 to 300,000 vehicles. Even if you assume that only about 20-30% of them will come back, will be scrapped in the first year, that's good enough to make up the volume drop because of the pre-buy. The third thing that from an Ashok Leyland standpoint, as I was mentioning earlier, every single one of our vehicles from from 2 ton all the way up to 55 ton is being designed with Euro 6 as well as LHD, and our cabs are European crash compliant. So we will have a significantly larger market where we can play rather than the export markets that we play in today. And that's why I don't think there will be any downside. If at all, there might be an upside.
To the industry growth is what you mean, right?
No, the third one is not sure for the industry. I cannot talk about for other competitors, but we are certainly going to see. The first 2 is for industry.
Sounds great. Thanks a lot and best of luck, gentlemen. Thank you.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, just a follow-up on the NBFC and the credit crunch which you highlighted. Can you share how's the situation in the used truck market and LCVs as well? Because LCVs is more of single driver, single employed people, and they might be more dependent on the NBFC funding.
LCV, not only the TIV has grown quite substantially, we have also grown. Our volumes have gone up about 40%.
Right, sir. I was asking the impact of NBFC for the liquidity crisis.
It's a short-term thing. Most of it is driven by owner-operators, so I don't think there was that big an impact.
Okay. And any impact on the second-hand trucks or the used truck market?
No, I don't think so. The second-hand market is there. It has always been there. Every vehicle is sold at least 2 or 3 times in the lifetime of it.
So there's no slowdown in the sales of used truck market due to financing?
No.
Sure. And the second thing was on the pre-buy. Do you think there's a possibility that given no OEM has announced a major capacity announcement, there is some pre-buying happening today as well, in the current year as well? Or do you think the customer won't take the risk of, paying EMI for a year in advance? Because given the higher discounts, and as you said, next year these discounts might, go away. Do you think there's any, given your interactions with customers, do you think there's a chance that there's some pre-buying happening today as well?
It is starting to happen, pre-buy, because you know what happened when the BS3 pre-buy happened for BS4, the prices went up.
Right.
We know that when BS6 pre-buy happens and everybody will start to hit capacity towards the end of FY20, there will be again price increases, right? Because the suppliers will increase prices and OEMs will increase prices, discounts will come down. So some people are thinking, if I have some demand, I might as well buy now. But I don't think in our industry anybody buys vehicle if he doesn't have demand.
Sure.
He must have something, and he may only say, let me advance the decision rather than delay it.
Right. Great, sir. Thanks for the clarity, and all the best for future endeavors.
Thank you. The next question is from the line of Gunjan Pratyani from JP Morgan. Also, as a reminder, participants who would like to ask questions may press star, then 1. Gunjan Pratyani, you may go ahead.
Yeah, hi. Thanks for taking my questions. I had 2 questions. Firstly, on this axle load, now a lot of industry feedback is coming that there has been some incremental capacity creation which is happening with a lag and which is reflected in, freight reduction in certain industries, or in terms of some freight operators talking about cut in their truck ordering. What is your reading of the axle load norms? Have you seen that there is a capacity creation which is starting to reflect in the market now?
The axle load norm was a big red herring. I had said during that time also that 65% of the market doesn't even get affected because it's volumetric, right? And the balance of the places where people were saying they're anyway overloading, so how should that have an impact? In July, this was announced, and in July, August, and September, we saw nearly 30% increase in TIV. So whatever was to be done is done. I don't think there will be any impact of that.
You haven't seen anything with the lag, because there was clearly feedback from some of the industries coming that there's freight reduction because of axle load norm relaxation. So I'm just trying to gauge, is there something that we see with a lag, or you still think that there is going to be no impact at all?
No, I don't think so.
Okay. And the second question I had was on the realizations. They seem to be a bit down. Is this because of discounting levels being high, or is it more to do with the mix of the revenues? If you can provide some color on this.
No, I think, as I mentioned earlier, that there has been an increase in the discounts, and I think that has impacted the realizations. Of course, from Ashok, that's been an industry phenomenon. Q2 realizations, net realizations have been a little lower than Q1 realizations. As far as Ashok Leyland is concerned, there was also a confluence of mix. Like I mentioned, that our BHA volumes were lower than Q1 and also the same period last year. So we had seen that absolute realizations, when you actually just divide it by the total volume, it will actually reflect that the realizations have dropped. But these are the 2 major reasons why we have actually seen the realizations come up.
And in the truck business, the 22% growth MHCV, the tonnage growth, would you be able to give any sense? Would it be significantly higher than this number, or it's broadly aligned to this number?
It would be higher because very clearly, over the last 12 to 18 months, we've been seeing the industry actually grow to the higher tonnage. And so we would actually see that the number, we don't have that number readily often. But the other thing that we are doing in Leyland, which is very important for us, we're trying to de-risk this company and not just have it as only a heavy vehicle company. So consistently over the last 4 to 5 years, we have been also increasing the size of our ICV portfolio. So our ICV market share, which would have been possibly something like about 12 to 14% about 4 years ago, today is about somewhere around 25%. So that's another way of de-risking the company. You keep filling in slots into the product portfolio, and you also increase your distribution, by which you actually ensure that, you are far, far more stable than you were 4 to 5 years ago.
There was product launches which were planned around the LCV. What is the update on that? Anything we can hear in the next couple of quarters?
Yeah, I think it has been pretty much on track. I think as far as... we had the upgraded of Dost being launched, and that is doing very, very well. We will also be, I think the LCV team is also working on the LHT variants for export markets, and you should be hearing some announcements in the later part of the year on that. And of course, we are also on a special project internally for, over the next possibly 12, 18 months, you would also see a completely new vehicle coming from the LCV platform. Very clearly, again, the strategy in the LCV is we had only one vehicle called Dost. Now we have now accelerated the penetration of both a Partner and Mitra, which is the higher tonnage vehicle. Partner is the 4-ton vehicle, and then Mitra is the 27 to 30-seater bus, which is on the LCV platform. We are looking at filling in the slots between the LCV and Boss. Boss is the 9 and 12-ton ICV. So you would see a lot more action coming in there as well.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Hitesh Goel from Kotak Securities. Please go ahead.
Thanks a lot for taking my question, and congratulations to Mr. Dasri for a successful career in Ashok Leyland, and also best wishes for the future. Sir, just wanted to get some sense on your outlook, because last quarter you had said that, you're talking about 10 to 12% industry growth in FY19. Can you share your revised, outlook? Because on the, I think Mr. Dasri has shared that, it will be 15 to 20% growth. Any revisions on that now?
I would actually say it's gone up, because when we last talked, I had said 10% and assuming that the balance of the year will be flat, but last quarter the TIV has grown up by 30%. So I would say that now if I say it will be flat, it will still be 15 to 20% growth. And October was higher than last year October. So, but I think it's still strong.
Okay. And my second question is that on the freight rate outlook, so basically now that oil prices have declined, we saw a freight rate increase in September. Are you seeing, freight rates stabilizing now or, coming down with the diesel cost? How should we see the freight rates? Because that gives an indication of the truck utilization levels, right, of the fleet.
I think the freight rates will come down little bit because of diesel cost, and when they go up, the diesel cost goes up, the freight rates go up, so it is, many of them have indexed it with their customers.
Yeah, but the fleet utilization levels are quite high. Is that what we should read from your comment?
Utilization levels are quite high, and that is what is giving us the buoyancy, saying that the market will continue to remain strong.
Okay. Great, sir. All the best. Thank you.
Thank you. The next question is from the line of Priya Ranjan from Antique Stock. Please go ahead.
Thanks for taking my question. First of all, best wishes to Mr. Dasari for his future endeavor. Really remarkable tenure for the last 14-15 years in the Ashok Leyland. And coming back to one question, one is on the construction side, when we are saying that it's around 40-45% market is from the construction. So typically, construction side, the life cycle of truck is also very, very short. So is this an indication that probably the cycle may not be so low probably when the next cycle turns down for the industry? And the second part is on the overall strategy of the company. I mean, when we have talked about 1/3 from truck and bus radial, 1/3 from export market and all, and plus defense, etc. So can we see more of alliances, more of a JV kind of situation in future to achieve all those kind of...
That is the vision that was set by the chairman and the board some time ago. And we will, as Dheeraj mentioned earlier, there is no change in strategy. If that implementation of that strategy requires us to consider some alliances, we'd be happy to look at. But like I was telling earlier, the product portfolio that we have built is so strong that we are very confident of achieving substantial growth ourselves.
And on the construction side, I mean, because the life cycle of the construction trucks are typically much, much shorter than what it is used in the haulage and all.
Correct. So what we look at as a lead indicator is the number of construction projects that are being awarded by the government. So the more construction projects are there, the bigger our market becomes.
Okay. And sir, on the ICV side, I mean, ICV, typically now the market share has been in and around that period for for many months or so. So, and some of the regions we have done pretty well, but some of the regions we are not able to deeply penetrate yet. So, what kind of regional strategy or we can think of from the ICV range?
There is no regional strategy per se that, if you put a regional strategy, that would purely be a pricing game, and we don't want to play that game. There is, for ICV, we are launching a new product in a 10 tons, which is going to be the market leader in terms of fuel efficiency and all that. We are not going to launch way too many products we have several new ones in high horsepower tipper and high horsepower tractor trailer, ICV segment, new buses coming. But beyond that, we will focus more on Euro 6 and so on.
Okay. And lastly, on the Euro 6 engine related thing, so we are now developing in-house. We are also looking at Hino as well as Cummins, if I'm not wrong. So,
not looking at Cummins.
Okay. So, Hino plus in-house development.
It's actually in-house. Hino came to us. We didn't go to Hino, but it's a joint development.
Okay. So, I mean, it will be a mix of both launches in terms of engine, or it will be either of the two?
We'll see whichever one performs better.
Okay. Thanks all. That's good.
Thank you.
Thank you.
The next question is from the line of Chirag Shah from Edelweiss. Please go ahead. Mr. Shah, your line is unmuted. Please unmute the line from your side.
Yeah, sir, two questions from my side. One on this new XL load norms. So, are the newly designed trucks now available in the system from Ashok Leyland as well as from peers in general, or their rollout is still yet to happen?
No, they're all available.
The rollout has happened completely.
Yeah. Some customers want the old version, some customers want the new version. It's very interesting to see how this is playing out, Chirag, but like I said, in many cases it doesn't matter, right? It's volumetric. 2/3 of the market, it doesn't matter.
No, I was more trying to understand from consumer behavior perspective that are they still preferring the older versions or they are looking to buy newer ones?
No. Most of them are trying to buy the newer ones.
Most of them trying to buy a newer one.
Those who are wanting the higher axle load, they are wanting the newer ones.
Yeah, and second question was on that on the 43 tonner that we had showcased. Any update? When can we expect? Because when we check at ground level, there seems to be a good amount of interest on that product. A good amount. Just there was at the time when you launched the 37 lift axle.
I think it will come this quarter.
It will come. In fact, that some guys were showing some kind of frustration that it is not getting launched earlier.
That's good, no? Maybe we should create a pre-buy for that.
Yeah.
And start taking bookings.
And just one clarification on the commodity side, Gopal, if you can highlight. So, most of the pressures are there in the quarter, or how should we look at the cost pressures and which are the areas that we see the cost pressures?
No, you asked commodity. Commodity steel prices are certainly going northwards. I mean, we expect that in the second half. See, this is an expectation, it's not an outlook. Because we've looked at that fast car volumes are actually coming off a bit, and they are one of the largest consumers of steel. If that were to happen, and then, there is a gentle softening of steel, which is actually benchmarked predominantly from China. If we see that happening, and if the rupee were also to kind of appreciate a bit, all of this should augur well for softening of steel prices in India. But at the moment, quarter on quarter, we have actually seen steel prices going up, which has been having a cost push effect on an industry such as ours.
Yeah, thank you. Thank you very much, and all the best.
Thank you. Ladies and gentlemen, we take the last question from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. Firstly, is again on the pre-buy itself. There is a slight change in that, in the sense that we can't sell any vehicle also after March 31st. Earlier, we only couldn't produce. Does that change anything for us in terms of the pre-buy expectations? Would we have to start planning well in advance, and the pre-buy period itself shortens? How do you see tackling that issue?
I think up by another couple of months. Bring it forward.
Sir, I couldn't hear you. I'm sorry. Hello.
All that would do to not have sale from April 1st or not have registration from April 1st. Up.
I'm sorry, sir. I think I'm not able to hear you.
We'll advance the pre-buy by about 2 months.
Okay. Yeah, in the sense, does it affect us in terms of production planning? And if we are left with any inventory, would we be able to, kind of manage with just exporting that BS4 vehicle?
Yeah, we should be able to. Our technology, as you know, even when the BS3, BS4 happened, is very modular, and we were able to just simply swap the engine.
Okay.
We will start to make BS6, and that operates in a different fuel grade completely.
Right.
We are leftover BS4 engine vehicles, we'll sell them outside.
Okay, so it doesn't really affect us much.
Yeah, if necessary, if I want a BS4 vehicle, I can convert it to a BS3 vehicle also.
Right. So secondly is on the scrappage policy that you mentioned. As of now, isn't that voluntary scrappage, sir, or is it mandatory scrappage? The 20-year and above?
Mandatory.
Okay, it's mandatory. Okay. So, that clarifies. Thank you, sir. That's it from my side.
Thank you.